All right, good morning, everyone. I'm gonna do a quick midweek market review real quick. Just before the market opens. I'm going to be focusing on looking at the futures market again. I'm not a futures trader, but I like to use the futures market just to give you, because futures market is just that. For those who don't trade it, it shows you what the future may hold for the overall stock market. So looking at the futures market early this morning, it is May the 25th, 2023. It's on a Thursday. And for those who've been paying very close attention, I'm gonna start off with the Nasdaq and show you guys something. Um, Nvidia had blowout earnings. I mean, it knocked it out the park. Um, in a bear market, keep that in mind. In a bear market, and what it did was it gapped up overnight, and it's up big pre-market. But I'm gonna show you guys something. For those who are not who have not been riding the Nvidia and the AMD wave all year, and you're just gonna decide to jump in when you see a big pop. Buyers beware. Buyers beware. Look at the Nasdaq. Here's the Nasdaq right now. We're still in the bear market. Keep that in mind. Here's the Nasdaq right now. Nasdaq futures, that is, back at a level of resistance. Back at a strong level of resistance. Hit that point there back in August, around August of this year, and we pulled back, rallied after about October. I'm sorry, August of last year. This is August of last year. We hit this point, and we pulled back right around August. Yeah, just before August of last year, around July, and then we pulled back the month of August all the way down to September. Then in September and October, we started to bounce from this level. Pulled up to the 20-period moving average. Yeah, pulled back up to the 20-period moving average. Tested it back here in November. Came right back down to the ultimate support level right around 1100, and then we bounced. So double bottom between October last year in November, and then we double bounce back up above the 20-period moving average. And look what we did. Nice rally in the Nasdaq. Nasdaq has been on fire since about November, October. Back up to that same level of resistance that we pulled back from in around July of 2022. All right. Do we break out above this level and head to the next level of resistance? I strongly doubt it. And some of my reason for doubting is that, at least not now. If you look at this, point out the RSI. RSI, we're already in overbought territory. This is a weekly chart, folks, I'm looking at. So this is a weekly chart. We're already in overbought territory on the weekly chart. Okay, in a bear market. Overbought in a bear market in a big way. That's a reading an RSI right now on the weekly chart about 77. When the market opens today, more than likely it's going to push much higher than that because of what Nvidia did last night. I think this is going to be a again, it's a big gap up in Nvidia, and we're going to show that here in a second. It's going to be, I think it's going to be another way to trap the bulls. Let's see if we can get some bulls got trapped yesterday and found a way out. And I think it's going to be another day that bulls going to be very excited of the potential of going into a new bull market with a very, very low VIX, which I told you guys in previous videos, very, very unlikely. And buyers are going to probably pump right on back into some of these stocks, thinking that we are in a new bull market. Folks, we're not. Just keep that in mind. We're not out of this bear market just yet. And I think this could be the ultimate bull trap. So that's what the weekly chart on the NASDAQ futures looks like. We are right at a level of resistance. So could we push higher today? Yes, we could, definitely. And I think whatever push we get, I think it's going to be an opportunity for sellers. All right. That's the NASDAQ futures on a weekly chart. Let's take a look at a daily chart real quick. Daily chart. Here we go. Getting RSI right around that 70 level. And look at the divergence on the RSI here in the daily chart. We were big time overbought, and RSI started to trend down. So there is a divergence here. So if we get a pop here, watch the RSI on the daily, because there's a slight divergence here. Every time it tries to rally, it continues to pull back. So could we get a nice little pop on RSI? Yeah. but I think it is in a downward trend on a daily chart. So it could get could see price rally, RSI not rise that much, which would be the ultimate divergence. And again, we're right around these highs up here. And if we look at let's go to look at a 4-hour chart on the NASDAQ futures. This looks more to me back up to, this is the ultimate top, 13,000, say 13,980. I don't think we're going that high. We got to see what happens, but this looks like a ultimate triple top pattern, or even head and shoulders. So head here, shoulder here, shoulder here. And this is normally where we falter. So we have to see what happens there. This could be the ultimate, like I say, this could be another big time bull trap. If all the bulls start to pile in here today, and by the end of the day, they could be disappointed. So we're to see how that pans out. That's the NASDAQ futures. Let's take a look at the S&P minis. S&P minis, here we go. Again, it's trying to rally with the rest of the with the NASDAQ. S&P minis is a little bit weaker. It is well below its 20-period moving average on the 4-hour chart, approaching up move on this 4-hour chart. I think that 20-period was going to act as an area of resistance. Here's the daily chart of those E-minis. Again, the ultimate high, or the where we started to pull back from on the daily chart was around 42.27. We're well below that level now. And again, at the open, I would not be surprised to see a nice pop in the market. See where it goes. But I think everything is going to be met with some fierce selling. Here's a weekly chart. Look, we are right at the top of a strong area of resistance, right around the 4,200 level. And we always started to pull back from that level. And I don't think we're going to get a rally back up to the level where to see what happens. But I think we're going to see some weakness in here, especially if we gap up today. I'm going to point out a monthly chart as well. So for right now, the monthly chart is still showing a red candle for the month of May. That is on the S&P E-mini. It's still showing a red candle for the month of May. Right at the level of resistance. I don't think we're going to push green here within the next couple days. And if we look at the, I don't think I glanced at the monthly chart on the NASDAQ. If we look closely at the monthly chart on NASDAQ, current green candle right at a level of resistance. Could the NASDAQ close in the green this month? It could be, and it could be the Lone Star. But it's right at a level of resistance as well. Let's go back to S&P. All right, so I think I look at all 3 time frames on S&P. And let's switch to Dow Jones. Here's our Dow Jones monthly chart. It too has a red candle, strong red candle for the Dow right now for this monthly, and I don't think that's going to change in the next couple of days or so, unless we get a breakout bull market. But again, I don't think we're going to get a breakout bull market in the next couple of days. Here's a weekly chart on the Dow. Already starting to pull away from that high. Already pulling away from this high. And a downward trending channel already from that high on the weekly chart. So again, buyers beware. Don't get caught up in a trap that the bears are trying to set for the bulls. If you're already in something like NVIDIA, AMD, use this as an opportunity to pull back on your position or take some profits. Oops, I want to do that. I want to do this. Bear with me, folks. So again, buyers beware. Don't get caught up in all the hype. I mean, great earnings report by NVIDIA. And it's still in a bull market, but I think this bull market will probably be phased after the gap up. So use this as an opportunity, folks, to try to take some profits, because I don't think this gap up in NVIDIA is going to hold. It's not going to be able to hold the market up by itself. So just keep that in mind. That is all right. Now let's go to Russell. Here's a Russell weekly chart. Again, Russell is also a weak link. Still showing a, let's go to a monthly chart on the Russell. Still showing nothing but red. And it's hovering just above the highs of 2020. So keep that in mind too. Russell's hovering right here. Just this trend line here is the highs of 2020. We break below that, look for much more downward pressure. There's a weekly chart on the Russell. Again, right below the 20-period moving average, which is acting as a level of resistance, as you can see there. Here's our daily chart of the Russell. Right in the middle of nowhere, right in the middle of this range, like it does not, it's struggling to push to go higher, like it's ready to break below that 20-period moving average. Let's glance at the VIX futures. Let's look at the VIX futures, not the regular VIX. Here, the VIX futures. It's a daily chart. It's back above its 20-period moving average. It's starting to look strong. If we get this VIX futures above 22, we'll watch out because it could continue to take off in a big way, and we could be right up to 25 in no time. Here's the VIX futures weekly chart, and it just looks the opposite of the overall markets. Look at the oscillators and the RSI. It is in a horseshoe pattern of turning back up right at its 20-period moving average, like it's ready to pop. So I think any pop in the market today it's probably going to give the bulls and the VIX some momentum to make a quick pullback and a quick snap up. So keep that in mind. That's a weekly chart in VIX futures. And here's a monthly chart in the VIX futures. If you look at it, it is, again, that's why I stress, folks, we're not popping out to a new bull market with the VIX this low. Normally, you're going to see a VIX high, and you're going to see even higher on a weekly, monthly, and daily chart. You're going to see a VIX high, not down here at these lows. Now we're going to be breaking out to a bull market? The VIX around these lows here. Okay, look at the VIX and RSI. I mean RSI and the VIX starting to curl up. So we're around oversold territory, even close to the very tight level of support on a monthly chart on this VIX, and in this VIX futures, we've been in this month. In the monthly chart, we've been around the support level for quite a while. So unless the bulls find a way to push this thing down in a massive way, you know what I'm saying? Yeah, I count it all out, because this level has been a strong level of support for quite a while on the monthly chart. And again, we're not going to see a bull market with the VIX this low. We're not going to see a new bull market anyway. We got it to as high as 80 back in 2020. So I do expect the VIX is going to rise from here at some point, continue to rise in a massive way. And once the VIX starts to get elevated, then we start to look and see, okay, where are we at now? VIX if the VIX make it to 40, I'll start looking and see what the markets are showing us, and let's see how the VIX goes over the course of the rest of this year, and start look for pivot points, but not until this VIX gets much higher than what it is. Okay, so that's the VIX futures. Now, another tool that you guys know I love to use, the SPXA 200R. Let's take a look at the weekly chart on that. Okay, here it is. And look how it is just giving us advance warning. Here's a weekly chart of this tool. Again, head and shoulders pattern here, even here. Head and shoulders pattern there. Back in October, you've seen the percentage rise to ultimate top, came back down, created this head and shoulders pattern, and now looks like it's starting to trend lower after breaking back below 20, after breaking back below 20 per moving average. So this weekly chart is definitely showing us what the overall sentiment of the market is. Overall sentiment of the market is still negative, even with a bullish NVIDIA and AMD. Overall sentiment, the market is still negative. RSI is just plunging. And this tool, again, the highest you can get, folks who not been paying attention, it's 100% of the S&P 500 company stocks trading above the 200 moving average. Right now, we're only showing, let's see, look at it right now. We're only showing 39% and still faltering. Look at that big red candle. Only 39%. So that means we got about 60% of stocks trading below their 200-day moving average, and only about 40%. So could this go much lower than 40? Oh, yes. Again, you guys have been paying attention to me for the past year. My ultimate goal, I do think we can see this percentage get all the way back down here to what we saw, at least what we saw back in October of last year, if not even what lower, if not just a tad lower. So let's see how this pans out the rest of this year. Again, folks, we are not in a new bull market, so buyers beware. All right, now let's take a look at a couple of things. Let's look at a switch. Look at a monthly chart here as well. Look at that big red candle on a monthly chart. That spells disaster. It's like we're about to break out of this box, folks. RSI pointing straight down. It's like we're about to break out of this box. So these next couple of months could be very, very detrimental to the overall markets. All right. Take a look at NVIDIA. So again, look at that gap up. NVIDIA is going to gap right up and prior to open to new high, brand new highs on all, and you're going to see that big move on all major time frames. It's a monthly chart. We're going to see this gap up very, very close to that $400 level. And folks, I think that's just going to be a gap up that's going to be fiercely met with resistance. So don't expect, this bullish trend in NVIDIA to just continue to rally and stay in a bull market where everything else is in a bear market. I just don't think that's going to happen. So if you had the opportunity to, to catch NVIDIA when it was back in November, when it was at 100, and you've been riding it since, kudos, and you made some heck of a profits. It's time to take those profits and run towards the hills until this bear market resolves itself. And I think this could be a stock that would definitely give us that signal, because if it can't, over the next couple of days, continue to rally above 400 and go to 4, 5, 6, 7, continue to rally, then we're not in a new bull market, folks. All right. Look at the RSI on a monthly chart. It's already at 72. RSI is already at 72 on a monthly chart. Let's take a look at a weekly chart on NVIDIA. We've been in overbought territory, folks, since all year long. All year long on a weekly chart, it's been in overbought territory above 70 on RSI. That has been huge strength, and today it's going to gap up in a big way, so that could push us well above 80, maybe to 90 on the RSI on a weekly chart. Okay, folks, so that is in danger mode. That is in danger. All right, dangerous to chase at these levels if you're not already in. And here is a daily chart on NVIDIA, and it's about to pop in over what territory on RSI again once the market opens with that big gap up. So I wanted to point that out there. Okay, now let's take a look at a couple more things. So look at Bitcoin. Bitcoin has been trending lower below its 20 per moving average, and it's been a steady grind lower on a daily chart. So it's well below its 20 per moving average, not well below, but it's hugging it, which is, this is a slow grind lower, and I think that's going to continue. I think the market is going to follow. Here's a weekly chart of Bitcoin. Man, it's get back above the 20 per moving average, but it's pressing back towards it now, and like it's ready to break back below it. That is not positive. And here is a monthly chart on the Bitcoin. Again, made it back up to 20 per, and it's like it's ready to tumble back below it. This red month setting in here, looks like we may be ready to head back below it. I think the market is going to mimic what Bitcoin does. Take a look at crude oil, because crude oil is trying its best to rally, but it's still not out of the woods yet, folks. It is not out of the woods yet. It's hovering below its 20 per moving average on its monthly chart, and we're like right at that level of support. Look at the weekly chart, and it's trying its best to rally. Crude is still right around these level, this level support, right between 71 to 70. Let's call it 75. If it could break above 75 in a big way and get out here around 77, then we can start to see if crude is in a new bull market. But still too soon to call that one as a new bullish up move. And then look at this is our daily chart on crude. Back above 20 per moving average, but it's starting to be met with a strong red candle, so this could start to sell off as well. Ultimate, look at gold. I think gold is stuck below the 20 per moving average on the daily chart, and it could stay stuck there for a second here. Let's just see what the overall markets are doing, but I think gold could continue to possibly sell off in the near term. That's a possibility. Looking at the daily chart of gold, look how it's also pressing back towards this 20 per moving average. Now, what we're ultimately looking for is to see if it can, so we can see if we can get a bounce here. We was able to do that back here, back in before April of this year, and we got to bounce away from that 20 per moving average. Now we're back to this moving average again. Again, I told you guys that these moving averages act as a magnet. So anytime you get this big space, only price action reverses back to the mean, back to the moving average, and we got the same thing here. So now, ultimately, to pay close attention to as we head over the next couple of weeks is, do we get a bounce here? But if you look at the momentum indicator in TDM squeeze, it's not looking in favor of a bounce or nothing sustainable. So let's see how that pans out. We could possibly break back below this 20 per moving average on gold as well. That's something to pay close attention to. If you look at a monthly chart on gold, this is also something to pay close attention to before I even draw in. There's something to pay close attention to, because it looks like a possible triple top here. This is a monthly chart. Like a possible triple top. And look at the space, the gap between the moving average and price action right here. Look what happened when we had that gap here. And we got to that big pop up. We pulled back. Same here. Big pop up. We pulled back, and we are back at that same type of scenario, folks. So ultimately, this is a monthly chart of gold. Could we be in store for another pullback? Could this be a triple top with a possible pullback in gold, substantial pullback in gold? It's a possibility. And if that happens, with that said, we could see everything could be end up being in a sell mode, with the exception of the VIX. Let's see how it pans out. Let's look at the dollar ETF. It's looking the opposite of everything. So the dollar, a strong dollar is negative for almost everything. So look at this dollar, monthly chart on the dollar. It's been forming a level of support. Not good for the overall markets, not good for gold, not good for almost anything. So the dollar finds a way to continue to bounce from here. And right now at we're already above 101. I told you guys before we get above 101, we start to look for a big breakout. We're right at around 104 to close yesterday. We get up here around 105, folks. The dollar, we'll start to see that this monthly chart start to turn green. Probably not this month, maybe in June we start to see a green month. And the dollar could be on tear, which is really going to put pressure on the overall market and a lot of the commodities. And if we switch to a weekly chart of the dollar, there it is. Look at that ultimate bounce. Told you guys that a little while ago. It looks like we were forming a double bottom. It's like that. It's coming to fruition, and we're starting to break back above its 20% moving average on this weekly chart. So all of these are signs, not positive for the markets, overall markets. So we got plenty of signs, signals to tell us that the markets could be heading lower, even after we saw yesterday. A lot of other things besides what's happening in our country, but it's geopolitical news all over the world that's still putting pressure on overall. That's going to put pressure on overall markets. You see what's happening with the debt ceiling talks. Even if they get a deal made, I don't think that's going to be enough to help sustain a new bull market. So buyers beware, buyers beware. Till the next video, I'll be signing off.